Good morning. It is August 26th, and this is kind of a morning recap or morning pre-market. This is something you should do every time you sit down to the computer before your trading session. So normally on the weekends, we go over and do a weekend pre-market analysis. But every time you sit at the computer, I know we're down on a 3 and 5 minute time frame to trade. You should always go out and look at your higher time frames, get kind of a fresh view on the market when you sit down before a trading session. So what I'm going to do is go over the 4 instruments that I covered yesterday. And basically you want to look out at a, like I said, kind of take a peek out at the higher time frames, if I can type here, and kind of see where things went throughout the night. So, we already had marked up our zones, and we had old trend lines on this, on gold here, and we marked our zones up yesterday. So we don't really need to do anything to that. We just need to look and see where things might have gone throughout the night, see where things may be going, and that'll give us kind of a clear picture as we look to take a trade throughout the day. Now, when we go down the smaller time frame, you'll see it actually tested the back of a trend line and then popped up through our zone. So it popped up through the mid zone, and right now it's on the top of that mid zone. So as we go back to the smaller time frame, here's our trend lines that we drew on the lower time frame. And if I pull those in, we had 2. So, gold actually made a big dip down. We drew a zone in here off of a 4-hour candle, and then basically it was bouncing off that going long. We have kind of 2 trend lines there. We drew one, this vertical line right here is Sunday at 6 p.m. So before the market opened, to the left, this is what we saw. So we had 2 trend lines. We drew an uptrend line from this low here over to this low, okay? So we have the 2 low points that we drew our trend line from, this low to this one. And then I actually drew an inner one because I saw all these bounces, bounce here, bounce here. There's 3-4 bounces in there. So I was like, okay, let's go ahead and draw a line there too, because I like where it's bouncing. It's obviously bouncing and respecting an area before it comes out to this outer one. So we drew that as a secondary, and if you look, we also had a bounce here. Well, then Sunday night after market open, it pulled up a little bit, but pulled back down and tapped that, and then pulled up and then pulled to the outer one. So our plan was really, trade it short if it breaks, if and only if it breaks this trend line here, and then we would trade it down here, back down to our 4-hour zone, and then up off this uptrend line. Well, it never broke. It never fully broke this trend line. So what it did was it went up through our caution zone, and it's been bouncing across top. So right where it is now, it's at that, back at that trend line, okay? So I'd be looking for bullish confirmation, and it's been going, it's been in a bullish movement for a while now. So keeping those odds in our favor, we would want to go long more often than short. So I would only look to short it if it breaks back through this mid zone, breaks through the trend lines. If not, I'm looking for, to go long. What I would want to see is I would want to see these 2 highs broken. Okay, that high and that high. And that's where you're going to take your alert tool. You're going to run it up the chart. You're going to come, set an alert on here that gold has broken a high. So just use the alert tool and just set broke high, look for entry, and just set yourself up an alert there so you'll know when it's broke. Now, if you want to get in at a little better price, you're going to look for bullish confirmation down in here off this bounce. So just remember that that's a little riskier, so don't put on your full amount of contracts that you typically trade, because and you can if you want, but just keep in mind it may not break this high. It may get right to that high, test that level, and then plummet back through. So keep that in mind, that if you do get in before it breaks a high, well, then it may just die out on you, okay? Was that the one? Let me go back to that, actually, for gold. Because I want to cover, if I can pull it up here. All right, so that's gold. We're going to go down to oil. Oil, we had 2 alarms set on this. The vertical line right here is, again, 6 o'clock on Sunday. So we had some alarms. I actually, it was right in here when I did the video last night. So we were in here on this sideways consolidated movement. We set an alarm up off of this high back here, which you can see is right around those lows. And then we set an alarm at this high right here. And we were looking for one of those 2 to be broken. Now, I mentioned I don't like to get in the first few hours of the market on a Sunday. I'd rather wait till 8 or 9, or 8 o'clock, 8 to 10. So those are my 2 hours that I'll look to get in any trade on a Sunday. So I like to let the market open, let it kind of settle in. Well, it did. It opened up above, and popped through that alert line, and then kind of settled down with lower lows, lower highs, and then popped out of that and did nothing but sideways throughout the night. And then we had a bullish pattern form here with higher highs, higher lows, and then it came back down to test that and then shot up through the zone. So that move is already extended, and it's up to our other target that we wanted it to go to. And this is a new one that we actually had to mark. So overall, we're thinking bullish on that. We've been bullish on that back here. So I went over this on Sunday that on Friday or on Wednesday it was down here at this low, and we saw movement off of that 4-hour zone, and we actually traded the break of the high on this, got in, traded long to this down trend line, and it pulled back down and kind of went sideways. And then it finally broke through, and we're getting that we've been in that bullish move. So those were our alarms that were set, the 2 alarms. And then the next alarm, as we went through on the video yesterday, is we had an alarm to go long here if it broke this. We had an alarm to look for shorts here if it broke that. And then our target was this alarm for a short, and then the zone, and then possibly this uptrend line. Well, when it broke the long, we had a target up here. So that's my alarm line right there. And I always like to set them before the zone. I don't like to set them in the zone because it doesn't always get to the zone. So sometimes they stop short of getting to those areas. So that is why we set the alarm before that. Now, that does not mean you're closing out the trade. You can let the runners ride. It just means you might want to adjust your stop. So, getting in anywhere during this trade and then it formed that bullish move up, well, then there was an alert. You would have wanted to at least close out part of your trade in case it reversed through the rest of the night. However, you could always let your runners run, move your stop to break even, and then let the runners go. Now, here's something with that. You have to decide for yourself what kind of trader you're going to be. If you're going to be one that you place the trade, it moves to a profitable position. And, I'm a firm believer, and I have to have a paycheck at the end of each month. So at the end of each month, I need to withdraw money. I have to have a paycheck. That's why I'm doing this. I'm not just sitting here playing around. So I have to have a paycheck at the end of the month, which means I have to be in profit at the end of each week, which means I need to take profit each day. So I take what I need per month, and I always use $2,000 as an example. Let's say you need $2,000. Well, that's only $500 per week. If you trade 5 days, then you're only looking for one trade equaling $100. Capture that, close out part of your trade, and then let a runner ride for a bonus. The runners are bonus trades. That's how I look at them. So that being said, you need to pull out partial profit. So these alarms, this alarm here would have been a good place to, hey, close out partial. Let's say you put on 10 micros. You have to decide for yourself. Do you close out 8? Do you close out 6? Do you close out 5? Do you close out 9? How many runners do you let go? That's going to be up to you. That's one thing you need to think of. And you don't think of it as you're trading. This should be thought up and wrote down on a piece of paper, spreadsheet on your computer, something. I like to keep things in front of me, so I suggest writing it down on paper. So when you're getting ready to go close out part of your trade, don't get caught up in the moment. Look down at your paper and it says close 8 for your partial. Well, then you close 8. Okay, don't panic and close 9. Or maybe yours says close half, close 50%. So if you put on 10, you're going to close 5. Look down at your paper says close 5. You close 5. Because if not, then you're just going to be looking at the screen and seeing you're in profit, and you might panic. I know I'm supposed to close 5, but I'm closing 9. Or you might not even think about closing 5. You might just say, ooh, I'm going to close 8. I'm going to close 9. So you need to have the stuff wrote down. So second, you've decided on, okay, first you've decided on how many you want to close out at partial. Second would be how do you want to move your stop loss? Once you close part of your trade out, you still have your stop loss where it originally was. So you could take a potential loss against those gains. So if you close out 8 contracts out of 10, you would have 2 contracts on as a runner. You would have a stop loss where it originally was. So if that backed up to your stop loss, you could lose 2 contracts, whatever your stop loss is. You could lose that against your gains you locked in. If you're okay with that, then you leave your stop where it is. If not, you're going to move your stop to break even. That's something, again, you decide ahead of time. Don't decide in the heat of the moment when you're in the trade. Decide that before you start trading for the week, for the day, whatever that may be. Now, you can tweak and adjust it. I recommend not doing it during the day, not tweaking and adjusting your plan during the day. Wait till after the day, analyze your trades that you've journaled, go back in, look at them and say, hey, wait, I've noticed this. I want to start pulling my stop to break even at least, or I want to start leaving my stop out. So that's something you have to decide ahead of time. Okay. So here's where we are on ES, and I need to dial it down to a 3-minute on this one. Okay. So at the start of the market, there again, the vertical line is 6 o'clock on Sunday. Now, it had pulled down bearish and hit near our 4-hour zone. The zones are off 4-hour time frame. So it pulled down and hit near our 4-hour zone. And then before the market opened on last night, it was up at the top, up at our mid zone. So we were looking for reasons to short. Now, it could go either way. So I set 2 alarms. I set an alarm up here, and then we had 2 alarms down here in case it broke those. Because if it broke these 2, well, then we definitely would look to see it move down to the zone. Well, we didn't get that. We didn't even get a break of this one. It closed near it, but didn't break it. So that was our move short. And then I actually tracked it with a trend line. So we had a move short here. Okay. And then right here was about 718. So what had happened was it moved short to that area and made a low. So it was making, it just shot down and made a low, made kind of a high here, made a lower low, and then it moved back up and made technically a lower high if you're just looking at bodies. If you're looking at wicks, a higher low. I did not call that a higher high. I did not call that a higher high with just the wick. Because with the wick, I thought, okay, it's just testing this price, but overall, price settled here. So on that turn, I'm like, okay, it still made a lower high. So I drew, you'll notice that I drew lines as it moved down. And what happened was it pulled down and doubled up here. So it pulled down and turned right on that price point that it hit here. So to me, that's a double bottom on a 3-minute chart. Now, candlestick patterns don't hold up as well on smaller time frames. You'll see all kinds of them. So you have to be careful trying to read that and say, hey, that's a candlestick pattern. Because yes, it is a candlestick pattern. However, it's on a 3-minute time frame. So we don't look for those to hold up as often. So it double bottomed there, but I'm looking more at price, okay, than candlestick pattern and tests of the trend line. So the trend line was drawn, I drew it off the high here down to here, and that extended through, and look what it did. So after it hit the low, it went up and still made a lower high, but came down and then turned right there at the back of that down trade line and then at our support level. So that is a signal to look for a long. Now I still want to, I'd rather see structure build up, because the structure to me is high, lower low, lower high, and then that low is not lower. So I know that I should start looking for bullish pattern to build up. So what I did was set an alert here on this line right here. And I said, I want to see that broke. If that line is broke, I'm in. And then we had a break of it here, and you could get in on those candles. If not, if you're saying, well, I don't want to get in until it breaks this, you know, this consolidated area right there. Well, then you're going to move your line and you're going to set an alarm off that other high. Okay. So either one would be valid for your line to cross to get in. So you might have said, nope, that's what I want to see. If it breaks that, I'm in. It broke that, you're in long. Or you're waiting on a test, which is here. Now, something you have to keep in mind. When we get these tests of support levels, like if that's where you waited, it came in, it just pulled lower. It's still a valid test and bounce, but just keep in mind, we're drawing these on a 3-minute time frame, 5-minute time frame. So they don't always hold up, and price doesn't always go exactly to our line. So keep in mind, as they pull through sometimes, it's still a pullback. We're still looking for a higher low, which we actually got. So, you know, here, you know, was our double bottom. It pulled up, made a high, and then made a lower high, and then pulled up here, broke. And that could have been your entry if you got in, closed partial at the next target, which is here. But it went up, made a higher low, or a higher high, sorry. And then it pulled back and bounced here, bullish candle, made a higher low than this one. So that could have been your other entry. That's the second valid entry on this trade. And again, I actually had mine line down here off of where it turned. I had my line where this high turned, not off the wicks. That's why I said sometimes I won't use wicks on the lower time frame. On 1 minute, I kind of ignore them pretty much. So that's the bounce to get in, or you would have had your line up there and you got in on that. So the one thing I want to cover on this, and this is key. So I just mentioned on the other chart, decide on what kind of trader you are. You're going to get in with, say, 10 lots. You're going to close out whatever it may be. 4, 5, 6, 7, 8, 9. You're going to close out partial as it moves up. And then you have to decide, are you going to risk getting in a trade and losing, or I'm sorry, keeping your stop where it is and losing back part of that trade that you've already locked in? Or are you one that wants to, I'm trying to put something on here, sorry. Are you one that wants to leave the stop where it is? Okay. So this is where my stop was. My stop was below that low. Okay, my stop was below the double bounce here when I got in on this when it broke long. So that's where my stop was. And then we had some targets, had target here, had target here, had target here, I had 4 or 5 targets. So I had these 4 marked here, and then this top one here was my 5th target. And then ultimately, if it broke those, well, I'm looking for it to go to the top of the mid zone. Okay. So what it did, and this is why I want to go over this as I traded it, that was where I got in, okay, on the break of this high right here. On the break of that line, signaled, got an alert, went ahead and took it. It pulled up, we closed partial, moved my stop up. So that's where my stop originally was, okay? Well, then I moved my stop under here. All right. So at that point, I went ahead and moved my stop up, and that's about where my stop was. Not quite to break even. Well then, and we've got all these alerts on here. So it popped up, sent out, hit this target level, and then another alert went out. So what I did was I think you guys can see where I'm going with this. Hopefully you can. And I moved my stop in between these two levels. So that's where my stop then was moved up into here. Okay. And then that's when that level was hit. I don't like to move it right below a line in case it's tested, like this one was here. Okay. So it moved up, hit that alarm. That's when I moved my stop here. And then it went up and triggered the third alarm. So on the third alarm trigger, I went ahead and moved it up. Now this is on runners right now because the partial's already been closed. Partial was closed, had runners on, and then moved the stop on the runners. And then it triggered that alert. And then it came up and triggered this alert. So since it was near the mid zone, at that point, I did not move my stop. I just left it there. I thought, well, I'm going to give it some room to breathe on my runners. Okay. If it goes through the zone and then ends up going through the top of the zone and testing it, I'll be in. I'm in a good position. I'm already in a trade. I'm not trying to get back in. Well, you see what happened. It pulled back down and took me out. So this was about 9:30, I think. Yeah, about 9:27, 9:30 in there, where it kind of rounded up. But see, it even hit this alarm. I still left my stop where it was on my runners. So it hit that alarm as well. So I thought, okay, it's heading bullish. I'm going to try and go to sleep. So I just shut down my charting and didn't really want to look and just left it go. Well, then it broke back through and, of course, stopped me out. So this is why I'm talking about. Sometimes I will move my stop and sometimes I won't move my stop. You have to decide on your runners what kind of trader you want to be. Again, my stop was originally down here. And the reason why I really want to point that out is because I had a good trade and already locked in partial profit and traded gold as well, but traded the two last night, locked in profit, and at that point I had runners on, but I moved my stop on this one because if you look, and I know you guys know what already happened today, but if I pull in the chart, it kept moving. So I would still be in this trade through all that if I would have left my stop to where it was. Now, even if I pulled to break even, my entry was about in here. So even if I would have pulled to break even, I'd have been stopped out. So that's why you have to look as you trade and make your plan and, stick to that plan and decide what you're going to do as you manage your trade. I like to, at night, sometimes I'll leave my stop out, sometimes I won't. There's really not always rhyme or reason to it, but I just moved it as it went up. I was just like, I'm going to lock in more and more and more profit. So on my runners, I had locked in a little extra profit on my runners and just gave it room to move. Well, then it moved, came back and stopped me out, and then kept going on. So this is something that every trader has to decide for yourself, and there is no right or wrong answer. I'm telling you right now, there's no right or wrong answer. Don't let anyone tell you that you have to do it this way. You need to choose. You have to make the choice of what you're going to do with your stop, with your runner. Are you going to move it to break even as soon as you can? There's traders that as soon as they're up X amount of ticks, they will move their stop to break even. I wait till I'm up enough to pull partial. I'll pull partial. And then on the runners, you have to decide, are you going to move your stop or not? Now, if I'm down here trading during the U.S. session, I like to manage my stop and manage my trade. So I'm watching things. So I don't always trail my stop. Sometimes I'll leave it out there and just look at structure and see if structure starts building up in the opposite direction. And then I actually will close out the trade instead of relying on the stop. So it's really up to you, though, and that's something that's a personal preference. Play around with both. I always tell people to commit to at least a month. So if you're trading any news release, if you're trading non-farm payroll, commit to a year. Comes out 12 times a year, every month, non-farm payroll. commit to a year, trade it, and then at the end of and track it, guys. You got to track it. So track non-farm payroll separate in your journal. I use Google Sheets on my stuff. So I have a tab that says non-farm payroll. I'm not going to remember. I don't even remember how non-farm traded on January, February, March, April. I don't. I take so many trades through the week. I don't remember how non-farm tracked and how it traded every month. So I rely on a Google Sheet, and I have a tab set up that says non-farm. That non-farm tab has January through December on it. January through December, I put the date of non-farm, and I will put my trades in there, positive or negative. That's all I need to know. Was it a positive non-farm day or negative non-farm day? At the end of the year, I will look back and say, nope, not going to trade non-farm next year because I had 7 losses and maybe only 5 winners. Or I'm going to say, oh yeah, I'm going to trade non-farm every year because out of 12 months, I only had 8 losses. But my losses were not, my gains outweighed my losses. My gains were 2 to 1. So I lost, and I don't care if they're 2 to 1 and that's what you're going for. Well, then you could lose 50% of the time. I can almost guarantee you should not lose 50% of non-farm. Okay. If you know what you're doing. So that being said, normally it's like 8 to 10. So I remember one year it dipped down to 7. So normally it's 8 to 10 winners against losers on non-farm for the year. So that's not enough losses for me not to trade it. But that is a separate strategy, non-farm separate. So, but then it pulled back up. But I would still be in the trade if I left my stop. So I just kind of wanted to go over that and mention that. NQ, we didn't really get good moves off that. We did get breaks of our alarms. We had several alarms on this. This was 6 right here on Sunday. I didn't look to trade it. I did not trade NQ at all. I only like to trade NQ. We're coming up here. We got about half hour before the U.S. market opens, stock market. So I'll look to trade NQ, but I would rather be in ES first. So it's gold and oil for me. Get in those, and then ES, and then we'll look at NQ. So I am going to go over platinum a little bit. I did not go over it Sunday night for the setup, but 6 o'clock is here Sunday night. It was back in our zone. So I actually shorted it. I know a couple other people shorted it as well. It pulled off of one of our zones, went to the other. These are 4-hour zones marked off of high and low swings. And then I got in short and it pulled down. I didn't close out anything on that. And I moved my stop down. But when I did, I got stopped out. So it pulled back up here. I got in short again when it broke this retracement line. So I had 2 shorts in there. First one had a small loss. And then on that one, you know, it pulled down, pulled back, and then it pulled down enough for me to close 1 out. I only had 2 on this. We got no micros on this. There is no micro platinum. So I closed off 1, let 1 ride, and I got him back here, this retracement line break. So I moved my stop to break even, and I got stopped out on my break even at that. So I had 1 loss, and then 1 contract close on this one. This one I only put 1 contract on, the first one. It's Sunday night. I'm not into losing a bunch of money on a Sunday. I'm not into losing trades. So especially on a Sunday, that is not how I want to start my week. So I'm not going to get in platinum with 2 or 3 lots, 2 or 3 contracts. Okay. Because that's, 10 or 10, 20, 30 micros. I'm just not going to do it. I'm going to get in with 1. That's my light, going in light. That's as light as you can go on platinum. I'll go in with 1. And if it's a loser, it's a loser. I might not get back in platinum. So overall, first one was a loss. But I did have a smaller loss because I moved my stop down a little bit. Not much. And then on this entry here, then on that entry, I was able to close out one, or I wanted to, and I closed out one when it dropped, and then it pulled back and kind of turned a little bit and made it. And then on this red candle, I was like, I'm just, you know, that was 12:30, and I happened to wake up, and I didn't close on that. I actually, where did I move my stop? It was over here. It was like 1 or 2 in the morning. Yeah, it was 1 something. It was back. It was over in here, and I moved my stop, and I got stopped out. And then overall, it's long. So, but you'll see it went through a zone, pulled back to test the middle of the zone. I don't pick that line right there. That line is just the middle of our zone. So we draw the zone off a high and low of a wick, and then, or start and finish of a wick, and then that midline is just the middle of the zone. So it pulled to test that and then moved on. So I'm not in it, but look where it went. It went right to our yellow zone up there. Okay. So hope you enjoyed. This is just kind of a recap. This is what you should do before you sit down to trade. I don't recommend just sitting down, dialing it into your 3, 5, 10, 15, whatever you trade. Just sit down and just boom, I want to place trade. I got to place trade right now. You should not be that rushed to get into a trade. You should be able to peek out the market, look and see what things are doing, and then from there, dial down and look to trade. All right, so safe trading, everybody. I'll talk to you later.